Good afternoon, everybody. Welcome to my channel, Data Driven Decisions. Um, these past couple of weeks, I've been working on finding a new job. Had two final interviews yesterday and this morning. I got a few more lined up this week. I figure I should get at least one, um, hopefully a couple. We'll see. But today I want to just talk about rolling over my 401k. So since I got laid off, there's no sense in letting them manage my 401k. Most of the time, when it's through a 401k plan, the expense ratios are are high, probably between 1.5% and 4%, and that's just too high. And I know how to invest myself, and I'd rather manage it with rock bottom expenses. So, um, it was an ADP. I just, you know, took the funds out and they mailed me a check. And then I just uploaded that check using the mobile app on Vanguard into a brand new account. And it was about $50,000. So now I have $50,000 that I need to invest myself. And I guess I already figured out what I'm going to do this time around with this new money. Um, my favorite author is William Bernstein. I think he writes the best. He's got three major investing books. The Intelligent Asset Allocator, which is very mathy, but if you love that, that's like my favorite book. I read it every year. It's just got great examples that really turn my mind on. And then he's got The Four Pillars of Investing. That's his most famous book. It just came out with a second edition. It's a great book. I just read the second edition. And then he's got the Investor's Manifesto. That's more of an easy read book. So, he's got the best books, and he's got investment portfolios. I'm going to choose his Sheltered Sam 90/10. So, sheltered means it's a 401k. It's tax sheltered. So I want to be sheltered. And then 90/10 is 90% stocks, 10% bonds. That's kind of how aggressive I want to be. It is very aggressive, but I have 25 years to retire, and I want that volatility because more volatility and risk leads to higher returns. So, I want to be high in stocks. My last 401k rollover, I did a more sophisticated plan where I had 500 different export portfolios that I graphed in a scatter plot to find the efficient frontier curve and pick the ones that are at the very top right, the ones given the highest return with the minimal um, risk. And, I think it's just doing average. I checked it out in Personal Capital. It's really doing as well as a mixed blend fund. So I think that's a reversion to the mean. Even though I picked the best stocks or the best portfolios over the past 30 years from a basket of 500, the best are just doing average now. And that's reversion to the mean, even though they were great. I think more people know about them, so they're more well known, and um, it's just not doing as well as I wanted it to. It's not doing bad. I mean, it's just doing average, and average is what I want. It still's got rock bottom prices. They're all just ETF funds that I have invested in. But let me share my screen. I'll show you what this time around I'm going to do. So this is the portfolio I'm going to do. The asset allocation. So let me pull up the website. So it's Portfolio Einstein. Everyone should go to this website. It's awesome. Um, I went to William Bernstein's page, and here he's got all of his different portfolios. Um, I went with this one. And here's the mix, and it gives you to the right the exact ETF of which you need to buy. So I'm still waiting on the money to settle. It's going to take about a week. But once I'm able to trade the money into the stock market. This is the asset allocation I'm going to pick. Last time, as I was explaining earlier, I picked these ones in red. This is the efficient frontier curve. 550 different export portfolios. I picked all the best ones, but it's somewhere like around here in it's actual like an aggregate. So not a crazy high return and average risk. So it's doing average, which I'm not complaining about. I'm doing average. So I try to do above average. I'm trying to do better than average, but this philosophy just gives me average. I wish I could pick beforehand the winners. This plot, and if you take the next 30 years, this plot will be very different. The ones at the bottom will be up top, and the ones at top will be at the bottom, thanks to reversion of the mean. They'll just look a whole lot different. So, past performance does never predicts future results. So even this philosophy wasn't great. It just produced average. Average is fine, but then again, you could probably randomly pick any of these and still get average. With this one, I'm hoping to get average too. 90% stock, so I'm going to get that risk benefit. It's going to increase a lot, but I just want the market return. I could just do the simple 3-fund portfolio: VTI, BND, BNDX. I want to be a little bit more sophisticated with that, and I just want to go with my friend William Bernstein because I like him the best of authors. I figure it's not going to hurt me. It could produce under results, but if it does, it's going to be at rock bottom prices, and it'll probably only be by a little bit. This is probably going to produce average results. So that's what I'm going to do. So once the time comes where the money's settled, I'll just carry this out. I'll do it in Excel. I go to my Excel. This is how I figured out the market, the basket of funds to select. This is the average, and then I transposed it. This is the asset allocation from this portfolio. It's got about 30 different ETFs. But I'll do something like this, just produce this plot right here using the allocations from that chart. It's going to be a lot simpler. This was more complicated, but that's what I'll do this time around. I'll just use this as the asset allocation and just get average. That's all you need. Well, thanks for listening to my channel. That's it for today. Wish me luck on my interviews. I had 2 final interviews the past 2 days. Hopefully I get at least one. I definitely like the first company that I interviewed with. It was like very behavioral interview, and it went well. And they asked me a challenge question that I had to figure out on the fly. It was, you have a 5-gallon tank, a 3-gallon tank, and an unlimited source of water. How do you get 4 gallons? It took me about 3 minutes, but I just kind of went through the different avenues of like, okay, what's my first option? I knew that it had to be about portions of a bucket after filling it into the other bucket. So the first 2 options of which you could choose from are, you could dump the 5 into the empty 3 or the 3 into the empty 5. And you just kind of work over those avenues. Both will work. You can find the answer from both of those avenues, and you just process of elimination. just go step by step. Okay, now after the first move, I make this first move. What can I do next? And it's about 5 steps, but you'll figure it out. And I'm cool. That was cool. They said I was only the second person to ever figure that out, and that like most people kind of just give up. And I certainly struggled, but I knew the answer was out there, and if I just think hard enough, I'll figure it out. So I got a lot of logic tools in my head of figuring out little puzzles, and those puzzles are always there in my work in data and analytics, especially with data cleaning and data transformation. So it's cool. Alrighty, well, thank you. Have a good one.